So when I was in banking, I basically I'm underwriting the deals and I'm on the sales side of the bank. So, you've got two sides of the bank effectively. The sales side, your goal and your job is to get loans out, to get money out, to meet those production goals. On the other side of the bank is the credit side where, their job is to protect the bank's money, basically protect their assets at all costs. And so they're a little bit more conservative. On the sell side, obviously, we're a little bit more aggressive. We think every deal is a good deal, and so it kind of balances out. It's a check and balance. But so we really had to make sure our credit package was tight before we sent it over to credit and understood the deal inside and out. But we basically had to sell internally to credit to say, hey, this is a good deal. Can you please approve this deal so I can hit my numbers? And we really believed it was a good deal. So that's the sales piece on the banking side that I had to do. And then, fast forward to now on the brokerage side, I'm selling property, I'm selling services. So the sales piece is something that is a through line through all those roles throughout my career. And then I also worked in development for a brief stint as well. So, but yeah.
So can you share with that credit package that you were creating to sell for those loans? What does that look like, and what are some nuggets that you can give for people who are looking to establish that?
Yeah, I mean, it really, I mean, you really have to understand sort of, I'll say this again, going back to the relationship piece. You want to reach out to a lender and form a relationship well before you have a deal on the table. Those relationships really do matter. I mean, we've got certain internal guidelines at a bank that you kind of have to abide by and check certain boxes, sure, but these are people at the end of the day. And at the end of the day, if your deal is sort of borderline, I mean, I've seen people get deals done that have strong relationships with lenders because they just had a good relationship and it was kind of a borderline deal that could have went either way. And I've seen people not get deals approved because they did not have that same relationship with those real people that are underwriting the deals and approving those deals internally at a bank. So yeah, form those relationships early, well before you have a deal. And in that way, you can kind of educate yourself on what they look for. One of the big things that we looked for at that time was just to make sure the deal cash flow. These are investment deals, obviously. And so for us, the metric at the time, and this is 100 years ago, the debt service coverage ratio had to be at least, 1.25, so 125. Um, I don't know what it is now. We use debt yield. That was another one as well that we use. So, to make sure the deal cash flow, but the entire package needs to come together. You had to have a strong sponsor team. So, you want to make sure you've got good partners, with a strong background and just really, just kind of play up the story, how you guys connected, what's your background, what expertise you're bringing to the table. That's more of the intangible stuff, but obviously
Right.
the deal has to pencil out at the end of the day. But you have to show that you've done your homework on the market, depending on what type of deal it was. I mean, back then I was doing a lot of multifamily deals.
Mhm.
Now I'm doing more office, industrial, and retail deals. But just have a good understanding of what the bank has an appetite for at that time. A lot of banks now are starting to kind of pull back on multifamily. A lot of banks are pulling back from office. Let's say that right now. So it'd be a
Oh,
tough time to get an office loan
okay.
in this market unless it's just super, unless there's a really good story behind it. So just having an idea of what banks have an appetite for what types of deals on the front end.
That's a good nugget. I know you were saying that you need to form a relationship well before you actually need the loan. What does that look like? Because my thought, I don't want to waste their time. Like, what does that look like? How do you reach out to them? Like, hey, I think one day I might like what step in your process? Like, how close to is it just a simple interest, or what is it that we should be looking at when it comes to building that relationship?
You're saying like how soon in advance should you reach out to
Yeah.
a lender? I mean, like today,
Today.
like yesterday, I mean, It really, I mean, here's the thing. You wanna have relationships with multiple lenders anyway.
Mhm.
So, there's no, I mean, there's nothing wrong with just reaching out to multiple lenders at any given time. Most of my clients, had different relationships with other banks. They were cheating on me or whatever, and that's just par for the course. I mean, you don't wanna put all your eggs in one basket, and then, with some banks, you can tap out or cap out, um in terms of just how much they can lend you. Banks have a cap on how much they can lend one entity or one sponsor. And so, if you want to do more than that, then you've got to, broaden your network of lenders to be able to get more deals done anyway.